Japan had an incredible economic boom in the 1980s, which was marked by the country's corporate behemoths like Sony, Toshiba, and Panasonic dominating the international scene. Tokyo's real estate market reached previously unheard of heights at this time, as demonstrated by the Imperial Palace grounds valuation surpassing that of California as a whole. With its level of prosperity, Japan appeared ready to overtake the US to take the top spot in the world economy rankings. But when Japan's economic bubble burst in the early 1990s, the country's economy took a serious hit. This signaled the beginning of a protracted period of stagnation that lasted for around 30 years. Japan's economy was unable to restore its previous speed as other world economies grew. There were indications of a possible turnaround by September 2023. The Tokyo Stock Price Index, a key indicator of Japanese business health, surged to its highest level ever recorded, surpassing the previous peak set in 1990. This resurgence coincided with a notable increase in foreign investment, marking a significant shift from previous years when Japan experienced consistent outflows of capital. In 2022 alone, the country saw $67 billion flow into its economy, highlighting renewed confidence from international investors. The shift in economic indicators suggests that Japan may finally be emerging from its decades-long economic stagnation. Factors contributing to this recovery include structural reforms, technological advancements, and strategic policy adjustments aimed at stimulating growth and attracting investment. These efforts are crucial as Japan seeks to revitalize its economy and regain its position as a powerhouse in the global market. Despite these positive developments, challenges remain. Japan's aging population and low birth rate pose long-term demographic challenges that could impact economic growth and sustainability. Additionally, navigating the complexities of global trade dynamics and competition from emerging economies will require continued adaptation and innovation. Recently, Japan's economy has shown promising signs, largely due to a surprising set of circumstances. For many years, Japan struggled with economic stagnation, but now, rising stock market values and increased investment are sparking optimism among investors and businesses alike. One unusual factor driving Japan's economic recovery is its benefit from issues that have plagued European economies: labor shortages and inflation. In most places, these are considered economic challenges, but in Japan's case, they're actually turning out to be beneficial. Labor shortages mean that businesses are expanding and competing more for workers. This competition has led to higher wages, a much-needed boost for Japanese workers who have seen their real wages stagnate for decades, barely rising even when accounting for inflation since 1990. The increased confidence in the economy and higher wages are also contributing to inflation levels not seen since the 1980s. This might worry some, but for Japan, which has struggled with deflation, a period where prices and wages keep dropping, often leading to economic stagnation, for many years, this shift is a welcome change. In contrast to many other nations, Japan has maintained a high standard of living despite these economic advancements. This is attributable to its high standard of living, safety, healthcare, and sophisticated infrastructure. Unexpectedly, inflation and labor shortages have revived Japan's economy after decades of stagnation, which is the source of the country's recent economic confidence. These adjustments are long overdue and much needed. They may mark a sea change in Japan's pursuit of long-term economic expansion and higher living conditions for its citizens. Its prospects for the future are possibly the best they've been in the previous 30 years. Therefore, let's find out if Japan can truly profit from this trend. Japan's journey to becoming a global economic powerhouse was unique because it lacked abundant natural resources, unlike many other leading economies rooted in commodities like oil. Instead, Japan's rise was fueled by a rapid embrace of Western technologies and industrialization after opening up to trade in the mid-1800s, ending its era of relative isolation. By the early 20th century, Japan had modernized significantly and emerged as a strong player in regional conflicts, eventually expanding its empire. However, this period of aggressive expansion and militarization culminated in its involvement in World War II, which profoundly altered its global standing. After the war, Japan faced severe devastation, particularly from the atomic bombings of Hiroshima and Nagasaki. Despite this, Japan embarked on a remarkable post-war recovery, driven by its determination to rebuild. Through strategic investments in technology, manufacturing, and infrastructure, Japan rapidly transformed into an economic powerhouse by the latter half of the 20th century. Japan's economy, which is among the biggest in the world today, is renowned for its advancements in electronics, autos, and sophisticated manufacturing. Its success serves as an example of how a country may become economically significant on a worldwide scale without an abundance of natural resources by utilizing technological innovation and industrial prowess. Japan's tenacity and adaptability are demonstrated by its ability to rise from destruction and assume a leadership position in the economy. This historical trajectory emphasizes how crucial innovation, international cooperation, and strategic planning are to promoting wealth and economic growth in the modern period. The Korean War played a pivotal role in Japan's economic transformation. It kick-started Japanese manufacturing as the country supplied American troops with weapons and machinery. Over the next 2 decades, Japanese companies continued to import foreign technologies and refine them. This laid the foundation for Japan's remarkable economic boom, known as the economic miracle, driven by export-led growth. During this period, Japan implemented business-friendly policies such as low interest rates and taxes, which encouraged businesses to thrive. Armed with improved technologies and ample funding, Japanese companies rapidly closed the gap with Western economies. They began producing highly innovative products like the Walkman, CD player, and bullet train, revolutionizing global markets. Explore more videos like this one by subscribing to our channel. By the 1980s, Japan accounted for approximately 10% of global exports. Its manufacturing processes were renowned for their efficiency and quality, giving Japanese products a competitive edge worldwide. This surge in productivity catapulted Japan to become one of the largest economies globally. Tokyo emerged as a new global financial center during this era, briefly leading in market capitalization. The optimism surrounding Japan's economic prowess led many economists to predict it would soon surpass Western economies as the world's leading economic superpower. However, this prediction didn't materialize. Nonetheless, by the 1980s, Japan had established itself as an economic powerhouse, demonstrating how strategic imports of technology, coupled with innovative manufacturing processes and favorable economic policies, can drive rapid economic growth and global influence. Japan reached its economic pinnacle around 1990, boasting a GDP comparable to today's figures at about $4 trillion. This historical context is crucial because it highlights the significant decline Japan has experienced since then. Once home to some of the world's largest companies, Japan now finds itself overshadowed economically. Japan's economy was on the verge of taking the lead in the world economy in 1990, but a number of factors caused it to decline. Japan's collapse began with the burst of the economic bubble, which was caused by rising interest rates at the end of the 1980s. Along with the property market, the larger financial industry and the economy at large were also impacted by this collapse. Japan faced 3 main economic concerns over the next 3 decades: debt, deflation, and an aging population. These issues have persisted, keeping Japan in a relatively stagnant economic position compared to its earlier heights. Today, the combined market capitalization of the top 3 largest American companies surpasses that of the entire Japanese stock index. This stark comparison underscores how Japan has struggled to reclaim its former economic dominance. Imagine you're a Japanese citizen in the early 1990s, just as the housing bubble bursts. Suddenly, the value of your home plummets, leaving you with a hefty mortgage to pay off, and a house that's worth much less than what you owe. This scenario was widespread across Japan, causing a massive loss of confidence in the economy. As demand for goods and services sharply declined, factories continued producing at the same rate, leading to an oversupply in the market, a classic cause of deflation. Prices fell, making it harder for people to repay debts that remained at inflated levels from the bubble period. This set off a cycle where spending decreased further, prices continued to drop, and economic conditions worsened. To counteract this deflationary spiral, the Japanese central bank lowered interest rates, but these measures were insufficient. Over the next decade, despite cautious adjustments to monetary policy, deflation persisted. Consumers held back on purchases, expecting prices to fall further, which further dampened economic activity. Banks, cautious about the unstable market, reduced lending to businesses, stifling investment and innovation. By 1998, the situation had culminated in a financial crash, prompting a massive bailout of Japan's banking sector to prevent a complete collapse. Despite the bailout, deflation persisted well into the 2000s, and private sector debt shifted to the government, resulting in Japan's debt-to-GDP ratio reaching unprecedented levels. Japan's unique position of having much of its debt owned domestically allowed it to sustain this high debt burden. In 2012, under Shinzo Abe's leadership, Abenomics was introduced, a bold economic reform package consisting of aggressive government spending, negative interest rates, and quantitative easing. These measures aim to stimulate demand, encourage borrowing, and inject liquidity into the economy. However, Japan faced another significant challenge: its rapidly aging population. Since 2012, Japan's population has been shrinking, reducing the workforce and limiting economic growth potential. Despite comparable productivity among working-age individuals, the overall economic output per capita has struggled due to the shrinking workforce. Since the 1990s, Japan's urbanization and work-centric lifestyle have led to a decline in the country's birth rate. These demographic changes present a significant issue because a smaller workforce is needed to sustain an aging population, which is made worse by cultural barriers and restrictive immigration laws that make it more difficult to attract foreign expertise. Despite these obstacles, efforts to overcome deflation through economic reforms and adaptive tactics are the source of recent optimism for Japan. Even though there has been progress, the demographic loss will always be a challenge. Japan is still figuring out how to manage these complications while pursuing sustainable economic growth in the face of particular economic and demographic difficulties. Japan's economic outlook often revolves around its demographic challenges, but there's reason for optimism regarding another crucial aspect of its economy: productivity. Over the past 30 years, Japan has consistently relied on productivity as a key driver of growth, as depicted in the graph illustrating its potential growth trajectory. Productivity, in essence, measures the efficiency of producing goods and services. Japan has historically excelled in this regard, thanks in part to its renowned work ethic and a highly educated workforce. These factors were fundamental to propelling Japan's economic boom in the post-war era. Despite recent concerns about labor and capital underinvestment impacting growth, Japan's productivity has remained relatively stable. This stability underscores the resilience of its economic foundation, supported by a culture that values hard work and continuous improvement. Technological advancements have also played a critical role in Japan's productivity gains. While there has been a slowdown in innovation and technological change compared to previous decades, Japan's ability to maintain solid productivity levels suggests potential for further growth. Looking ahead, Japan's economic strategy could focus on increasing investment in technology and enhancing production methods. By leveraging technological advancements effectively, Japan can bolster its productivity even further. This approach aligns with global trends towards digital transformation and automation, which offer opportunities for economies to enhance efficiency and competitiveness. Beyond just being environmentally friendly, Japan places a strong emphasis on sustainable living and environmental preservation in order to create a society that is robust and forward-thinking. Japan is redefining success by emphasizing innovation in these areas and demonstrating that societal well-being and cultural richness are just as important as economic progress. Japan is leading the way in developing solutions that other countries will probably have to follow, being the first major economy to address large demographic shifts without depending exclusively on development. This change in emphasis toward quality of life, rather than unrelenting economic growth, provides a window into a future in which advanced economies flourish via innovation, sustainability, and the well-being of their people. In conclusion, recent developments indicate a potential turnaround driven by structural reforms, technological advancements, and strategic policies aimed at revitalizing growth and attracting investments. Challenges remain, particularly concerning demographic trends and global economic dynamics. Japan's economic journey, distinct for its lack of abundant natural resources, focused on technological innovation and industrial prowess following its mid-19th century opening to trade. Despite setbacks like World War II, Japan rapidly rebuilt into a global economic leader by the latter half of the 20th century, propelled by export-driven growth and strategic investments in technology and infrastructure. Today, Japan faces demographic challenges and economic restructuring, but continues to emphasize productivity and technological advancement. The country's shift towards sustainability and quality of life reflects a broader vision beyond traditional economic metrics, positioning Japan as a model for innovation and societal well-being in advanced economies. Don't forget to like, subscribe, and hit the bell icon for more updates. And turn on notifications to stay up to date with our latest content.